Okay, so right now we are going to talk about market maker models. And market maker models are simply the way we are going to start putting everything together. And the way that I describe market maker models is that market maker models, it's the thing that has always been in front of you and simplifies things so much, but you've never seen. It's very similar to the power of three, and you'll be able to see that we can apply the power of three on market maker models, that they intertwine. Like a lot of the concepts that we've talked about so far, they intertwine. And that's why these first days were all about laying the foundations, thinking right, understanding the market, understanding order blocks, understanding fair value gaps, understanding liquidity, understanding everything so that we can piece everything together. Because the only way that you will become a profitable trader is by being able to piece things together. Right? Yes, I'm going to give you a strategy, but if you don't understand how the market moves, you will never be able to become profitable because you won't know how to execute this strategy consistently. And that's what you have to understand, is that the number one focus for us as traders is understand how the market moves and where the market moves to, so then we can make informed decisions on our executions. And that's what market maker models do. Market maker models, they simply give you a diagram of how the market is going to move and how we can take advantage of. We just piece then that with how can we take advantage of this, right? So MMXM are market maker models. The reason why there's an X, is because you have market maker buy model, market maker sell model, right? That's the only reason why it's MMXM. It just looks cooler. It looks way cooler to be MMXM. Right? It's a market maker buy model, market maker sell model. They look very, very similar. They're just inverted. But basically, we have the sell side of the curve and we have the buy side of the curve. In market maker models, they start piecing everything together. Why? Because we have internal market structure, we have external market structure, we have higher time frame PD arrays, we have order flow, we have liquidity, we have everything. So the way I want you to imagine market maker models, the same way that you want to imagine external market structure and internal market structure. So if you check right now, if I do this and you have a very nice bullish market structure, let me put my camera a little bit smaller. We have very nice bullish market structure, right? That's what you can see right here. We have move up followed by this move lower, right? Before you see this part, think about this part. So that is the sell side of the curve. This is the counter trend move, right? And this is the external liquidity. When we are moving to the downside and your daily bias is still bullish, you expect all of this move to the downside to be just gathering liquidity to hit a higher time frame PD array to then align internal market structure with external market structure and give you what we call the market maker buy model. That's what this is. The market moves lower, it taps a higher time frame PD array, it shifts, and then there you go, the buy side of the curve starts. People call this the buy program. So this is the market is in a sell program. So overall the market is selling, and eventually we shift and we go into a buy program, buy side of the curve, sell side of the curve. Now, the reason why this is important is because this should be able to tell you so much already about how we are going to execute on price. Because a lot of people, what they do is that first they try to call this high, right? We've already talked about that. Don't try to call the high. And then a lot of the people would look at this and be like, well, I can execute on the move to the downside because there's a fair value gap here for sure. And then I can execute on the move to the downside to the higher time frame PD array. And then I'll execute on the move to the downside and I'll be highly profitable. That is not what profitable traders do. Because profitable traders understand that once they start positioning themselves short, if there's not enough of a risk to reward towards a higher time frame PD array, because there can be a fair value gap, there can be an order block all the way up here, right? They understand that once they position themselves, their bias, their mind is already thinking now, how can I make the most out of the sell? So what profitable traders do is they understand that the overall market structure is bullish. So the number one thing you want is to correctly identify the higher time frame PD array we are going to tap, and then execute in line with the external market structure. So what happens is that the market moves higher. As the market is moving lower, profitable traders are thinking, okay, what is the higher time frame PD array that is attracting price that then is going to give me a reversal that I will want to trade from? So that's where all of their focus is. The focus during all this time is that. And then once the market moves bullish, that's where they're like, yes, exactly what I was waiting for, exactly what I was planning. This is the time to execute. This is where their eyes light up, eyes light up, my heart opens up, and it's like, come to me. Yes, this is exactly what I was waiting for. Then boom, trade. Take the most out of the move, right? That's all that it is about. It's about identifying where the market is going to react from, and once it does, boom, you will execute. That's all that it is, right? So that is what the market maker model allows us to do, is just understanding market structure and understanding when to execute. You don't want to be aggressive here or here. You want to be aggressive here on this portion of the move, because that's when you have the expansion of the move. Because think about this. What is this? If this is just one candle, look, we have the high, we move all the way down, and then we have the move up. This is the power of 3, right? So we're literally applying everything we have learned so far here. We have liquidity being built up on this move lower that then helps us with the move to the upside. We have possibilities of sessions opening that the market then moves to the higher time frame PD array. We have PD arrays, we have fair value gaps, we have order blocks, we have market structure. Like I have this right here. We have market structure, we have daily bias, we have liquidity, we have high value areas, because think about this. Once you identify the higher time frame PD array and the market starts reacting, what are you going to do? What is one of the things that is highly profitable for you to do? Is understand, okay, now let me draw a fib from the higher time frame PD array, the low that was just printed, and the high and the target, and then I understand what areas I want to execute on. Okay, highest probability to execute on, this is A. Okay, this is B. I'm still okay with executing on here, and this is C. Okay, at this point, the trade is gone. I'm not going to execute anymore, but that's fine because you know you can be aggressive. This is an aggressive color because you know you can just be aggressive on the A and B areas. So we're identifying also high value areas because you're thinking beforehand. The market is bullish. Where will the market go first? Where will the market go after? You understand that through the daily bias. You understand that through the power of 3, right? Then the PD arrays and then SMTs. Because again, if you want to absolutely crush it with SMTs, think about market maker models. That's all you have to do. Most of the way that we are going to trade, it's going to be market maker models, right? It's going to be a market maker model. So what you have to do, again, as the markets move to the downside, so what do you have to do on this move? Let's even do this right now. So on this move to the downside, oh my God. On this move to the downside, your focus, identify the PD array we will react from, right? And then on this one, the focus is execute towards target. That's all that it is. You will not need much more than this. And this is what our trading is going to be based on. Same thing with the market make a sell model. Again, imagine that there's a big move to the downside. You expect the market to hit a higher time frame PD array, generate all of this liquidity as it's moving to the upside. So we have internal bullish order flow or market structure right here. Then we break. That's when you start executing. That's where your eyes have to light up. And that's where you have to think, yes, this is time to execute. That's all that you have to do. You will see your trading will completely change once you do that. Right? So that's market maker models for you. So everything is applied in market maker models. And again, let's quickly see some examples. So we have, oh, that's not what I wanted to do. So we have move lower, range. Our bias is daily. Our daily bias is bullish right here. We have very nice move, boom, manipulation, market moves up, and then we come back in, and then we move to the upside. Right here, we also have bearish daily bias, market moves up, range moves up, sweeps the high, sweeps the hourly high, then moves to the downside. This is where you want to execute aggressively. The same thing right here, range, market moves up. Notice how we invert this fair value gap right here. Beautiful, then move to the downside. Very, very nice. Let's go on to the next one. We have, again, this is like perfect market maker model. We have a higher time frame PD array. The market moves higher, range, move lower, range, move lower, range, move lower. Starts to flip bullish. This is where you get aggressive. Now notice this. If I push this, this is the best part. I absolutely love this part. That's why I love trading. Like this is why we trade, because of the beauty of this market. If I do this, if I draw exactly what happened right here, and I now push it to the side, look at what we have right here. Like, is this not a picture perfect depiction of what we have right there? And by the way, let me tell you, in the beginning of my journey, let me just show you the last two examples. Sorry. So range moves higher, boom, taps a higher time frame PD array, market shift, moves in, and then moves to the downside. And a very aggressive one, range, big move lower, followed by this staircase move to the upside. So this is beautiful power of three. This is beautiful market maker model. Now, this is the basis of how we trade, and now we are ready to go on to entries. Before I go into this again, just understand, in the beginning of my trading, I'm being dead serious. My mentor would show me this, and I would be like, well, but that never happens. It seems too specific to happen, because I did not understand how the market books. I did not understand that this is how the market moves. And you'll see this happening on the 5-minute. You'll see this happening on the 1-minute. You'll see this happening everywhere. I can guarantee you that. But it's something that you need to see for yourself. Just understand, over the last few weeks, I've made thousands and thousands of dollars just trading market maker models. Right? So it's important for you to understand that this is not about, oh, you see this and 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 this, and then you execute. It's understanding that market maker models are structure. Market maker models is how the market books. Market maker models is how the market manipulates people out, gives us the market shift, and then moves in line with the higher time frame direction. So it's not about me giving you something extremely specific that you will have to respect it no matter what, or you will be unprofitable. No, I'm telling you, this is the basis of how we trade. It's the understanding of market structure. It's understanding how the market books, because now you will be ready to go into the entries and understand them clearly. Because so far, all of this was basically showing you how we look at price, how we look at market structure, how we look at fair value, how we look at order blocks, how we look at everything. Now we go deeper. Now we go into the entries, right? Now this is the real sauce. Like before, oh my God, this has seriously hit me. Before, I give you the foundations, which are extremely important. If someone skipped it, you should not have skipped it. I'm telling you right now, you will understand less if you skip it. So now we are ready to tackle the entries. And you will see that this is going to completely change the way that you look at trading. So with that being said, let's get into the entries. Let's get into some examples. Let's get into some psychology. Let's get into getting you funded in 2025. So I'll see you tomorrow. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.